Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, I'm going to be providing an update on CloudMD. This is a company we've covered previously on the channel, and the share price has absolutely collapsed over the last couple of quarters. So I think it's now presenting a great buying opportunity for anyone looking for exposure to the healthcare or telehealth sector. Now we're going to talk about a number of bullish catalysts on the horizon for this company in today's video. But before we do, please take a second, hit the like button, you guys. It's a huge help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below if you're currently holding shares of CloudMD, what you think about their business model, and how you think they stack up to some of the other players in the healthcare space. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be providing an update on CloudMD Software Services Inc. Trades under the ticker symbol DOC on the Toronto Venture Exchange. Now this is a company we covered quite closely on the channel. We haven't done an update video in a number of months now, and this company in terms of the share price has fallen off a cliff over the last few quarters, and I think it really is presenting a great buying opportunity if you're looking for exposure to the telemedicine, telehealth, or healthcare sector. Now, CloudMD is looking to be a one-stop shop or a holistic healthcare provider. We're going to take a look at their updated investor presentation in a second here. But before we do, I wanted to take a quick look at the chart because as you can see, this company is now trading under 40 cents Canadian. So this is as of close on Tuesday, July 26th. So you can see they were up 1 cent on the session, about 3% on the day to close out at 38 cents Canadian. And if we look back just a couple of months, you guys, to the end of March of this year, CloudMD was trading in the 88 cent range. And furthermore, if we look back to my first video covering CloudMD Software and Services, the company was trading just below $2. So it definitely has been on a downward spiral here, you guys. I think this is a number of factors here. So obviously the macroeconomic environment, a lot of penny stocks have been hit hard. This is a tech or telemedicine company, so a little bit more speculative. Obviously tech companies have sold off tremendously. It's not yet profitable. So I think investors have really shied away and started to pull money out of some of these smaller unproven penny stocks, and I think that really is presenting a great buying opportunity if you're in this one for the long term, as we're going to talk about in today's presentation. Now, based on this share price pullback really between March and May of this year, we're now looking at a market cap in the neighborhood of about $110 million for this company. So the market cap is now sitting below their projected or annualized revenue run rates for this year, which again is super exciting as a potential investor in this company. Now, with that being said, CloudMD actually just reported their first quarter financial results for 2022. This came out May 30th, you guys, so a couple of months old, but I quickly wanted to browse through this because the numbers really were quite impressive. So you can see quarterly revenue came in at $41.4 million. Again, market cap on this company is right around $110 million Canadian compared to only $8.8 million in the same quarter of last year. So that represents growth of 372% year over year. Their gross margin came in at 32.5%. So that's improved 250 basis points quarter over quarter, and really quite impressive compared to a lot of the companies or growth companies that we review on this channel. And if we double click on these bullets in a little bit more detail, you can see revenue for Q4 of last year, so quarter over quarter, came in at $38.7 million. So they only increased by a couple $1 million quarter over quarter. And they actually specifically call out the primary reason for growth was the consolidation of MindBeacon into CloudMD's results. So this is their most recent acquisition. It's really focused on mental health or addressing the variety of mental health issues we're seeing in today's society. So that was one concern, that it wasn't necessarily driven by organic growth. And you can actually see there was a decline in the digital health solutions division due to supplier issues with VisionPros. So that was definitely one thing that I think turned investors off. We saw revenue growth quarter over quarter, but it wasn't necessarily driven by organic growth. Now, if we compare to Q1 of last year, there definitely was some organic growth in that story, so that's good to see. Now, profit margin, again, I said was 32.5%, so that's up quarter over quarter from 30% in Q4 of last year. However, if we compare year over year to Q1 of 2021, we're actually down from 40.9%. So that, again, could be a red flag for investors and part of the reason we saw saw that sell-off. Now, the company specifically calls this out. It's due to a revenue mix between the periods, and specifically the addition of their online vision care platform, which is a lower margin business overall. Now, the company does say it expects gross profit margin to increase throughout 2022, so this is definitely something to keep an eye on. And then finally, net loss, you guys, came in at $5.6 million for the quarter. So again, they're not yet profitable. One of the main reasons I think this company has been beaten up so bad over the last few quarters, they put up a loss of 2 cents per share compared to a loss of 15 million or 6 cents per share in Q4 of 2021 and a loss of 5.3 million or 3 cents per share in Q1 of 2021. So the company again calls out the year-over-year increase in net loss. So we're talking about the overall number, not the net loss per share. It was primarily due to the additional expenses incurred to support the company's growth strategy. So this is a high growth company, you guys. You have to spend money to make money. But again, this is a potential red flag, especially in this macro environment where investors are seeking safe companies that are profitable, they have a long-standing track record, and they can deliver shareholder results. Now, the one other thing I wanted to call out here before we move over to the company website is the cash and cash equivalent position of CloudMD, currently sitting at $47 million as of March 31st of this year, compared to $45.1 million in the prior quarter, so December 31st of last year. So this represents a huge portion of the company's market cap, you guys. About 40 to 50% of the company is now sitting in cash. So again, that's something that really caught my eye here. And they've got a long runway in terms of being able to finance their operations before they have to worry about raising any additional money. So now that we've taken a look at their most recent earnings, I wanted to jump over to the company website. For those of you who missed our initial coverage, I'll do a quick reminder of what this company is all about, but I would definitely encourage you to go take a look at those previous videos. So CloudMD is focused on transforming healthcare. Built by a team of medical professionals, CloudMD is a complete healthcare ecosystem that connects all points of the healthcare journey through one centralized platform. So offering a one-stop shop or a holistic solution for healthcare services. Now, how they actually do that, you guys, is through a number of foundational principles. So a team-based approach built by medical professionals and proprietary technology, which we're actually going to look at later in the investor presentation. And as you can see through the various different company divisions listed here, whether it's clinics, pharmacies, digital health services, or enterprise health solutions, the list in terms of the offerings from CloudMD is quite extensive here, you guys. They've got a number of different business units, different offerings for patients and customers, and you can see they've been very active in the M&A space, acquiring new companies, new business units, and folding that into the greater organization. And with that being said, the roster now is really quite impressive. So over 5,700 clinical staff, 1,400 doctors and nurses, 1,800 mental health professionals, and over 1,600 allied health professionals. So the network and the team that CloudMD has assembled is really quite impressive. And this is really another reason why I feel like this company is primed and ready for huge growth over the next couple of years. And again, this team really touches all aspects of the health journey, whether it's virtual care, primary care, specialist care, healthcare navigation, mental health, which is really relatively new for the company, and health coaching. So these offerings together is really what creates that complete ecosystem where patients can get that one-stop shop or treatment plan that a lot of people are really looking for. So now we're going to shift gears and we're actually going to jump into the updated investor presentation and take a look at some of the numbers and developments since our last video on CloudMD. So at a high level here, you guys, you can see annualized revenue is expected to be in the neighborhood of about $165 million. So well above the market cap of this company, which again is currently sitting at about $110 million. So that's a major check mark in terms of one of my investment criteria. The next one, $47 million of cash on hand. So again, nearly half of the company's market cap is sitting in cash. And the third number listed here is actually the market cap. This is as of March 31st, 2022, you guys. So obviously the share price has declined a little bit since that point. But at that point in time, market cap on CloudMD was sitting at $130 million. So you're actually able to pick up shares at an even more attractive price than you could have when this deck was put together. Now, in terms of the company's growth profile here, they've had over 16 strategic acquisitions since 2020. So when I said they've been very busy in the M&A space, this is exactly what I'm talking about. And year over year growth is at 372% that we talked about in that earnings release a couple of minutes ago. Now, in terms of their reach or network, they've got over 12 million lives covered, 7,200 employer clients, and over 1,800 direct mental health professionals, as we saw on the company website. So really growing their number of touch points and the number of patients that are included under this healthcare ecosystem. Now, this slide here is new to the investor presentation, and I thought this was super important to throw in because it really shows where the revenue from this organization is coming from. So Enterprise Health Solutions, or EHS, represents about 65% of the company's current revenue. So this is going to include things like their integrated health management platform, mental health, behavioral health, occupational health, virtual care, assessments and rehabilitation, their employee assistance program and their student assistance programs, and they specifically call out the importance of data-driven and proven outcomes or results within this business unit. Now, next up is their digital health services. So this currently represents about 15% of the organization's revenue. This is focused on what they coin as clinic-in-a-box solutions for their ERM, billing, scheduling, and online portals. Their multi-year recurring revenue contracts that are on auto-renewal, their consulting and services model, and really all of their digital endeavors at this company. Now, it's important to call out they're continuing to develop and test digital properties for CloudMD, and then they're going to make these solutions or platforms commercially available to the market, whether that's through service as a software or a platform as a software solution. So this segment here is extremely high growth. This is where I see the future of healthcare going, digitalizing a lot of these legacy systems, and CloudMD really is on the forefront here. Now, the remaining 20% of their revenue actually comes from traditional clinics and pharmacies. So they've got that hybrid clinical network connected with proprietary digital health tech. So kind of alluding to that previous section we just talked about. They're going to leverage virtual care to increase their clinic footprint and see more patients. So that's where we start to talk about telehealth. And right now they've got over 500,000 direct patients on their clinic platform. So the reason I wanted to throw this slide in is not only to show the various different business units, but really prove how diversified this company's revenue streams are, some of the big growth areas, which we're going to talk about again in a second here, and really how the company is executing on a number of different fronts. Now, speaking of these various different fronts, one of the big recent acquisitions has to do with MindBeacon, and this is really focused on mental health, specifically coaching and mental health support services. So as CloudMD continues to evolve their business, they're making new acquisitions, and MindBeacon is one of those that they've recently made and are extremely proud of in terms of what it offers this company. So they initially did a trial with Sun Life, looking at providing various different mental health coaching opportunities, and the results of this pilot really were quite overwhelming. So 89% of people experiencing depression and 91% of people experiencing anxiety noticed major improvements through these services. 73% said they had a better understanding of their benefits. 82% said they would recommend this service based on their experience, and they also observed a 46% increase in plan members utilizing their mental health benefits for the first time. So the success of this mental health pilot between CloudMD and Sun Life Insurance Company was overwhelmingly positive, and as a result, that's why CloudMD feels there's such a great opportunity for the MindBeacon platform. So this acquisition is going to allow CloudMD to expand their mental health coaching, to offer behavioral change coaching, and expand their mental health care, which is going to amplify their ability to manage various different disability and mental health claims. They're going to offer a broad continuum of care to address mild, moderate, acute, and chronic mental and physical care. And it's also going to allow them to accelerate their U.S. expansion through additional capabilities and cross-sell their solutions because of MindBeacon's recent acquisition of this US-based mental health provider. So this alone is going to represent cost synergies or savings of about $7.5 million, which have already been identified through CloudMD. So really a strong push into the mental health space, which, as we've talked about in previous videos, represents a huge opportunity as we've seen rates of depression, anxiety, and mental illness absolutely skyrocket in our post-pandemic world. And you can see based on this slide here, that would really fall into the mental and health section. They also have their employee family assistance program. So that's going to be things like short-term counseling, financial, legal advice, crisis support, critical incident support. the mental health, which we just talked about, so the coaching, therapy sessions, peer-to-peer community support. They've got their telemedicine division, so the primary care, access to specialists, all virtually or over the phone. And then their workplace health division, which is focused on assessments, evaluation, occupational health staffing, workers' compensation, and a variety of other offerings like disability management and on-site health and medical services. So you can quickly see how this comprehensive care or this portfolio of different business units really does cater to their patients or customers regardless of where they're at in their health journey. And this slide here really backs up that growth story through numbers. So you can see over the last few quarters, you guys, the company has grown exponentially as they've continued to fold in these new services, new offerings, and new business units. And if we look at 2020 compared to 2021, and then now the first quarter of 2022, it is really quite astonishing how quickly CloudMD has been able to fold in these various different organizations and really start to see that top line revenue growth, again, 372% year over year, which we talked about in the intro. And with that being said, the management team is now really focused on that sustainable profitability and growth. So they've built their platform, they've transformed from that traditional clinic operator system, and they're now ready to hit the gas here, you guys. And they're 100% focused on profitability, which in my opinion is the missing key here to really gain back investor attention and get that share price moving. Now, in terms of share price, you can see there's a number of different analysts that currently cover CloudMD. The consensus or average target price is $1.69, which represents tremendous upside or opportunity from where CloudMD is currently sitting in the 38-cent Canadian range. So for those reasons, you guys, I think this company may present a great buying opportunity at this point in time. It looks like they've really found some strong support in terms of the chart around 35 cents Canadian. And this is a company that's really been folding in a lot of different various business units over the last few quarters. I think the overall market conditions and investor sentiment right now have really placed CloudMD in an unfavorable spot. And as we all know, this is really where opportunities present themselves. When investors have been turned off towards an industry or a company, share price is overreacted to the downside. And if you liked CloudMD at $2 or $1, you should absolutely love this company sub 40 cents. So for those reasons, you guys, definitely worth a closer look or re-examining this company if you haven't taken a look in a while. I'd love to hear your thoughts in the comment section below. What do you think about their recent acquisitions, their push into the mental health space, their focus on profitability? How do you think CloudMD stacks up to some of the other companies in the healthcare or telehealth space? And do you think this company is currently a buy, or do you think there's more pain to come? Now, if you're still watching the video at this point, hopefully you found some value, so make sure you hit the like button before you leave. If you're not currently subscribed to the channel, McNallie Money, feel free to do so. And with that being said, that's all for now. Thanks so much for watching and have a great rest of your day.